What's up, YouTube fam? Welcome back to the channel. In this episode, we're going to discuss the safest strategy for consistent income when it comes to selling options. So, there's a lot to discuss when it comes to selling options. There's a lot of talk about it. There's a lot of speculation, right? So I want to just cover some things that I think are important that I've learned along my journey of when I started to today. Someone left a comment on one of my videos recently, and I really enjoyed it. It was that option sellers eat like birds and poop like elephants. And I looked into it, and I believe the actual phrase is they eat like chickens and poop like elephants. And I understood what he was going after, but what I did is I decided to look more into that quote. So I searched it, I went on Reddit, I read all about it, and I want to break down how I think we can counter that quote and if I think that quote is actually true, right? So again, I'll say it one more time. It is that option sellers eat like birds and poop like elephants. So what does that mean? It means that we take small premium wins for the inevitable large loss, right? So, one of the premises of this channel is the fact that we're taking trades that win very consistently, right? We're winning maybe 9 out of 10 trades, maybe even 18, 19 out of 20 trades. I think on this channel, we technically haven't really lost anything, right, since we've rolled, but it took us upwards of like 30, I don't even know the number, 20 to 30 trades to finally be in a position where we had to roll, be in any sort of drawdown on this account, right? Like from the moment we started this account, it has basically been straight up. And now we finally had a loss, or not a loss, but you guys know what I'm saying. Finally came back to reality a little bit. And now I do believe we'll head back up. It depends on what the market does, right? It depends on our current position. But I want to discuss again the phrase and how we can counter it. So, realistically, the safest strategy when it comes to selling options, first and foremost, is going to be making sure you're getting involved in stocks that are trending, right? And then ultimately having a strike that is below a low. So, I asked the Discord, our free community, to give me some plays, give me some stocks to look at. So one of them that was discussed was Hood, right? So an example would be like, let's just say you wanted to sell, next week expiration or something after that, right? The simple strategy is to target a strike below this low. If you want to go even lower and be safer, you can target something like this, right? So if we go and we type in Hood, let's give this a second, right? And we go, let's say we go next week, or we can even go 2 weeks out. All right, so let's go 2 weeks out. We'll target the 37.50. Okay, now for my account size. Yeah, I always like to do it with my account size. So it's like we can collect $600 over the next 2 weeks, right? Now, again, that's kind of the phrase, right? We're putting up 22,000 to only collect 600. So that's where the phrase is coming from, right? Now, are we ever really worried about losing this 22,000? Not really, because the only way you're going to lose it is if Robinhood actually goes to zero. So when you think about it, right, when you look at the strike and you see that it's at 37.50, okay, you see that we're putting it on a relatively strong low, right? You're looking at a 4-hour chart. You see we tested this level, we bounced off this level. This is all showing strength, right? The fact that it came here and stopped, the fact that it popped up from here, that's all, you can call it what you want, right? That's supply and demand, institutional buying, right? There's plenty of reason to believe why this is a level that's going to be respected. So when you're selling a put at this level, right, basically if it goes up, this put is just going to become worthless very fast and you'll be able to cash out. And then if it comes down, you can kind of expect that it's going to test off this level and give us opportunities to exit for a profit, or at the very least a very small loss or break even. Now, in the world of, eating like birds and pooping like elephants, in my opinion, there is one counter to it, right? And there is one way to take it further. And that is ultimately to eventually have to buy the stock, right? To eventually get assigned. And that should be always your game plan when it comes to selling options. You should always be prepared to get assigned, because if you want to make the most money possible selling options, it's going to come from assignment. And I know I've discussed that on this channel. Like, I know we would all love to just collect put premiums for the rest of our lives. Like, believe me, if I knew I would never lose a trade and I can just, collect the highest premium possible, I'd love that, right? I would do that forever. I'd put all my money into this. But since that's not something we could ever guarantee, right? Since there's always a chance that it's going to go against us and we're going to get assigned, we have to learn to embrace that, right? Because ultimately, if we were to get assigned and ride it up, that is where the highest profit potential is going to be. So that's what I want to counter, right? Is I want to say that you shouldn't always rush to do covered calls when you do get assigned, because there's a lot of worlds where you're better off letting it ride and then doing covered calls when you're ready to exit. So, I'll go back to the current position I'm in, which obviously we've discussed this position so much on this channel, right? So obviously currently we are in the money. Our strike is at $50, okay? And I'll show you guys the position, right? We're in this Con-L position that is down money, okay? Now, obviously there's a lot of time left, so I'm not worried about any of this. Like I'm sure this option premium is going to start to lose value quickly, as we get closer to this date. And that's the good thing about selling options further out, right? Is you're giving it time to decay. Now, obviously in this case, since we're in the money, it's a little more challenging. But the point I'm getting at is when January 17th comes around, we will collect this premium. If we didn't roll, right? Assuming we decided to let it get assigned, no matter what, we're going to be collecting all of this. Now, with that being said, the perfect world in the world of an option buyer, as much as I would love it to bounce back up, believe me, I would love to get out of this position, ASAP, right? I'd love to. So yeah, as much as I'd love to get out of this position as soon as possible and collect premium, ultimately, right, what would make the most money would be if it kept going down and we kept rolling with it. And then ultimately, right, let's just say it comes all the way down to, $22. We get assigned at, let's just say, a $25, right? And then rode it back up to, whether it's highs or even, 100%, even less, right? Even 20, 30, 40%. The point is like, yes, there's definitely some truth in that phrase of, oh, option sellers eat like birds and poop like elephants, but there's always a counter to it, right? And there's always a way to be smarter and safer than the average person, right? So in my opinion, the first things first is you want to be targeting volatile stocks. I'll give you guys another one that was discussed in our community, which was RGTI, okay? So RGTI is another quantum computing stock that's been absolutely on a tear, right? And ultimately, okay, when you look at it, right, obviously it's extremely bullish. Now, there is risk, right? It's came up very fast. Anything that comes up very fast can obviously come back down very fast. But when you look at these premiums, they're obviously very good, right? Perhaps too good to ignore. Now, the safest way to go about it, right? We have a clear low, whether it's a 4-hour or a daily, right? We get below it and we look for a strike to target below it. So in this case, the 1050, right? Now the 1050, we can go, for our account size, 22 contracts, collect 770 in 8 days. And obviously, like, there's a lot of strikes higher, right? Like, you can go all the way up here and collect 3,500 in the next, 10 days. Now, I wouldn't recommend it, right? I wouldn't recommend going in the money or at the money. I would recommend always targeting a low. This will protect your downside. This will also allow the premiums to lose value quicker, because the further out of the money you are, the quicker the premiums will lose value. But ultimately, the point I'm getting at, right, is this is the safest strategy for generating consistent income. And also, like I said, you're kind of combining it, because as long as you are always selling options on a stock that you would want to buy, right, that's the most important concept. I've stressed that so much on this channel. Like in this case, something like this, it has gone up extremely fast. It's been around, I guess, for some years, and it came down. Now it's flying up. Ultimately, right, wouldn't you rather collect all this, right? You would rather make a 10x, and I get that. Any of us would, right? 700%. And that's where the rolling comes in. That's where understanding how to target lows and ultimately eventually getting assigned comes in, is because, like I said, long term, right? The whole point of selling options, really, as much as we are using it to generate income on this channel, really what it's about is building positions. And that's why one of the things I've discussed is ultimately eventually using more money, right? Like, obviously I want to build this account up, and that's the plan. The plan is to build this account up from 20,000 to whatever the amount is and never stop. But hypothetically, right, you could use options to build a position, right? So let's just say, going back to where we're at with Con-L, let's just say things don't turn around quick and it does continue down and we keep rolling down with it. essentially we get to, since we're rolling down, it's almost like buying the dip. That's my favorite part about it, right? Because we're getting to lower our entry. Let's just say over 2 months, we're able to get our entry all the way down to $35. You know, at that point, I'd built in a position, right? Because if I had just bought Connell at the top, whether it's 73 or when I entered the position was 60, that's a very different story than having a $35 entry, almost, 50%, right? So that's the point that of this whole thing is like selling options, specifically put options. It's really just a method to collect premium while ultimately trying to get a good position on a stock. So it's like, there is a world where the smartest thing to do is like, all right, I'm going to keep doing this until I have the position. Then I have to just let the position sit. But obviously you want to keep collecting premium on new names. So that's where, the idea of, if I'm stuck in a position, maybe I should use more money to then be able to sell puts on the next stock until ultimately I'm just building position after position. So that's really it for this video, right? It wasn't about covering multiple names. Obviously, we can go look at some other names real quick and see what I think we should do. So SMCI, again, another name that has great premiums. If you're going to target something, target it below this low. And that's really the simple way to do it, right? ACHR, if you're going to try to target it, try to get towards the low of this candle. Okay, let's see. RGTI, we discussed. IonQ. See, now it's not loading. IonQ, obviously one of my favorites from just something I've looked into this channel. Again, try to get below this candle, preferably below this red candle. $41. And ultimately, yeah, I mean, that's just really it, right? Again, I'm not necessarily giving you guys names. There's tons of names. And if you want me to look at more names, I'm always looking for new names with high premiums, things that I can eventually sink my teeth in. So if you want to give me names, please feel free to comment on this video or definitely join our Discord. I'm always in there, always chatting it up with you guys. I love to do it. I love to communicate. I love to be a part of my own community, and I love to be there with all you other option sellers, underwriters, learning from you guys, working together, and ultimately collecting premium and getting rich together. So I hope you enjoyed this video. I hope you learned a lot. Make sure to tune in tomorrow for the next one.